Okay, let's talk about what's really going on with Indonesia's currency collapse. Because if you think this is just another boring financial crisis story, you're missing the deeper chaos unfolding here. Imagine waking up one day and realizing your money is literally worth 20% less than it was 6 months ago. That's not hypothetical. In Indonesia right now, the rupiah has plunged to 18,000 per US dollar, a level so bad it's worse than the 1998 crisis that toppled a dictator. But here's what fascinates me. While everyone's blaming Middle East wars for economic pain across Asia, Indonesian economists are saying, hold up, this is mostly self-inflicted damage. Wait, what? A country making its own crisis worse? Let's unpack this. First, let's address the elephant in the room. Why does a soybean-based snack food matter more than oil prices? Because tempeh, Indonesia's iconic protein source, is now a symbol of systemic failure. Producers import soybeans from the US, and when your currency tanks, those beans become unaffordable. But these small businesses can't just raise prices on their low-income customers. So what do? They shrink the product size. Think about that, they are literally shrinking food portions to survive. This isn't just economics, it's a moral dilemma. How do you balance feeding the poor with staying in business when the government can't control inflation? The tempeh makers are screaming for help, but their real issue isn't just currency, it's the complete lack of safety nets for grassroots industries. Now let's talk about the 50% plastic price surge. Wait, plastic comes from oil, right? So why is Indonesia's plastic crisis worse than other countries? Because the Strait of Hormuz shutdown hit petrochemical supplies globally, but Indonesia's collapsing currency turned this into a double whammy. A satay seller in Jakarta told ABC prices jumped 50% overnight. That's insane when you're already surviving on razor-thin margins. This isn't just a currency problem, it's a supply chain catastrophe masked as an exchange rate issue. And here's the kicker, Indonesia's government keeps saying market sentiment is to blame, but their own economists admit 60% of this crisis comes from domestic policy failures. So who's lying? Let's dissect the domestic factors they mention: unpredictable policies, lack of transparency, and terrible fiscal management. Wait, isn't that just economist code for we messed up governance? When Moody's and Fitch downgrade your credit rating, calling out centralized policymaking. That's not market sentiment, that's institutional rot. And the stock market losing 30% this year? MSCI threatening to downgrade Indonesia's equity status? This isn't temporary volatility. This is investors saying, we don't trust your systems anymore. But here's what truly blows my mind, workers' real wages haven't increased in years. Inflation is eating purchasing power alive, yet formal sector salaries stay flat. And the informal workers, who make up most of Indonesia's workforce, are just completely screwed. So what's the escape valve? Predatory online loans, $8 trillion borrowed by tens of millions through pinjol apps. That's not financial innovation, it's desperation. Young Indonesians aren't taking risks because they are foolish, they are borrowing just to survive while prices keep rising 5 to 6% annually. This isn't just a currency crisis, it's a generational wealth transfer in reverse. So where's the government? They are hiking interest rates and claiming everything's under control. But when their own central bank governor resigns midterm, that's like the pilot jumping out of a crashing plane. And while the finance minister insists fundamentals are strong, the fact remains, this currency collapse is happening alongside stock market freefall and credit downgrades. How many crises can one country juggle before things break? The 1998 crisis needed riots to topple a regime. Today's crisis is slower, more insidious, but potentially just as dangerous. Because when tempeh becomes a luxury item, you know the system's broken at a foundational level. What's the bigger picture here? Indonesia's crisis reveals a global truth. In 2025, economic stability isn't about trade wars or oil prices anymore, it's about governance quality. Countries with transparent institutions and policy consistency survive shocks, those relying on personality-driven governance crumble slowly. And Indonesia's pain isn't unique, it's just the first domino showing how fragile emerging markets really are when leaders prioritize optics over fundamentals. So next time you see a currency chart, don't just watch the numbers drop, ask who's steering the ship, and whether they are even qualified to hold the wheel.